Hey guys, my name is Lisa Welch. I am the owner of Calvert's Tax Service, and I want to go over some tax basics with you today as you start your new chapter. The first thing I want to talk about is those of you going directly into the workforce for full-time jobs. First, you need to determine if you are a W-2 employee or a 1099 contractor. Most of you will be a W-2 employee, and your employer will withhold your taxes from your weekly salary. But some of you may end up getting 1099 contract jobs, and you will be responsible for your taxes yourself, either quarterly or paying them when you file your tax return. If you are a 1099 contractor, you need to set aside 20% for federal taxes and 5% for state taxes, and then send those in when you file your tax return. If you are a W-2 employee, like I said, most of you will be, your employer will provide you with a Form W-4 to fill out. 2020, they came out with a new style W-4. You will put your name, address, and social at the top. You will check the single box, and then you will sign and date. Do not fill out anything else. That's it. If your employer provides you with a previous year W-4, looks like this. Again, you'll put your name, social, address. You will put a 0 in box 5, sign and date, and that's it. Don't fill out anything else. If your employer has you fill out your W-4 online, you will do single 0. And guys, I beg you, do not let your coworkers or friends talk you into going exempt or adding additional exemptions. Yes, you will get more money on your check, but most likely you will end up owing when you file your tax return. And I know you'd like to get a refund. The next thing I want to talk about is 401ks, retirement plans, and IRAs. For those of you that your employer provides a 401k retirement plan, I highly recommend you put in as much as possible. Contribute to that 401k. Not only do you start saving for retirement now, but that money contributed to the 401k is not taxable at this time. So it reduces your tax liability. If your employer does not have a 401k or you are a 1099 contractor, you can contribute to a traditional IRA. And with a traditional IRA, you get to deduct that on your tax return. So it works just like a 401k. That money contributed is not taxable. The last thing that I want to talk about are those of you that are going to college. There are up to $2,500 education credit that can be claimed on a tax return for you or your parents when you're in college. Most of you will not be working a full-time job, so your parents will still claim you and the education credit. It is not beneficial for you to claim yourself and the education credit if you're not working full-time, as you will not be eligible for the full $2,500 credit. So again, most of you, your parents are still going to claim you. So if you file your tax return, you're going to check the box that says someone else is going to claim me as a dependent. But I urge you to have this discussion with your parents come tax time so that you're doing the right thing. If you have any questions or need your taxes prepared, please feel free to get in touch with me at Calvert's Tax Service. And I hope you guys have a fantastic life. Take care.